First of all, we want to be looking at what our expectations were yesterday, and if we look at what's happening here, during the course of yesterday's trading session, we had this parameter, that is the bullish trend line here, the purple line on your screen, that is expected to serve as our guide for the trading session yesterday. And what do we have? We can see that the price movement has been respecting this bullish trend line since the beginning of the week. We saw the first move here on Monday, and we saw our price rose into the $90 area, and then we saw price come back into the bullish trend line, after which we saw price come back again to the upside. So our plan yesterday was that, okay, fine, since we have this kind of scenario, we have two possibilities that we will be looking forward to on the US oil. The first scenario we were looking forward to, we were around this point yesterday. If you remember, we were around this point yesterday during the live session, where I was telling you that it appears price is respecting that bullish trend line one more time, but we don't want to get too excited. We want to wait for a signal to happen, and that signal is likely going to come in the form of a breakout of the $88 level, which was identified yesterday. And you can see what happened yesterday. We saw a breakout of that structure, and then price came back to do a retest during the later part of the New York session yesterday. So we actually took advantage of this move at this point, and as price continued to the upside, remember I told you that we should move our stop loss to break even, considering the long-term bearish momentum we have here. Remember, we have a long-term bearish momentum, and as well we also have a structure at the $90 mark, which has been rejected a couple of times since the beginning of the week. I will show you that. So we had the first rejection here on Monday around the $90 level, and then we had the second one during the New York session on Tuesday. We had one here. So we are saying, okay, fine, because of the multiple rejection of this level, we want to be very cautious, as this might likely be a selling niche for participants in this market to push price to the downside from this point. So in that regard, because of this information we had here, we said we are going to be moving our stop loss to break even as soon as price moves in our direction. So lo and behold, what do we have? We had price move about how many pips? That is about let's see, about 100 pips thereabout, before we saw price coming back into the $88 level, which was our entry zone. So right now we were stopped out at this trade. As at this morning, I was stopped out on this trade, and we closed at break even. But one thing we also want to take into consideration today is that we can see our participants, we can see our price has been rejecting that bullish trend line since last week, and we have a couple of rejections at this point. So for the US oil, what I'll be thinking right now is to be taking advantage of the move right above this key level here at the $88 level. So I'm still looking forward to a bullish momentum here. Look at this candle that closed here a couple of hours ago. We have this hammer candle, which is also a very strong bullish signal, though we had the bearish engulfing candle afterwards, but it still gives us a clue into the strength of the buyers at this point in the market. So what I want to be looking forward to, since we already had a breakout of the structure giving us a signal that we have been waiting for, then multiple rejection of this area is also a good place for us to take advantage of a bullish momentum. So like I said yesterday, if price continue to the upside from the $88 level, we want to ensure that we lock in our position to guard against any sudden pullback that could happen. So this is the setup we were expecting yesterday. So the first thing I will do right now is to scale up to the higher time frame. This is for those who are not part of the session since Monday, so that you can have an holistic perspective on what our expectations were before we got to this point in the market. So now let's go up to the daily time frame, and on the daily time frame, the first thing we will observe is the price action has been on a very strong bullish momentum since the beginning of the year, and as a result of that, we were able to identify this resultant bullish trend line after connecting the series of lower highs. Now, After connecting the series of lower highs giving us that bullish trend line, we also identified a key level right around the $85 level. And if we look at the structure since the later part of last year, we can see how sellers used this area as a selling niche, and we saw our price was rejected the $85 level between the month of October and November, and price declined down into the bullish trend line, hereby respecting that bullish trend line one more time. And then we saw a breakout retest of the structure during the month of January this year, which led into price peaking at around the $130 level. And afterwards we saw a consolidation phase where price action retraced right back into somewhere around the bullish trend line and also the key level at the $85 area. And if we look at what has been happening since the month of August, we saw how the key level area and the bullish trend line area has been a major niche for buying power. We can see multiple rejections from this area, giving us a clue into how strong that level is for a possible bullish momentum that could happen from this point. That is, we could have a scenario where price respects this level one more time to push price to the upside, or we could be having a breakdown of that key level or the bullish trend line here, where a retest to structure will give us further confirmation to join a decline. So you can see from what I've explained so far here that we are right within a very strong and sensitive area that we need to look out for important structures that will be guiding our action going forward. So with the information we have here on the daily time frame, let me delete this so that we can have a clean chart. So with the information we have here on the daily time frame, let's zoom into what has been happening since the beginning of this month of September. And if you zoom in, we'll notice this impulsive move to the downside, which broke through the bullish trend line that has been supporting price action on a bullish momentum. So we saw the breakdown, and whenever we see a breakdown of structure like this, we want to be mindful, as there is a possibility that we could be having a momentum shift evolving behind the scenes. So we saw the breakout, we saw a retest, price came to as far as the $81 level before we started seeing bullish momentum going forward. Now, from a technical perspective, whenever we see a breakout of structure like this, we normally expect that price will come back to do a retest of the structure that was broken to probably give us a signal of a trend continuation, and that is probably going to be something like this, where we saw the breakout of the bullish trend line here. Price came into the $81 level, and then it's likely that price will be rejecting that bullish trend line one more time to send price going to the downside, or we could be having a breakout of that bullish trend line where a trend continuation to the upside could be happening. So now, with this information we have here, how do we intend to trade the US oil going forward? Now, if we scale down to, let's say, the 4 hours time frame to have a pictorial understanding of what has been happening in the last 2 weeks on this pair, the first thing we will observe here is that since the beginning of last week, we have been seeing bullish momentum after testing the $81 level, giving us a clue of a possible bullish momentum that could be happening. Now, if I give you a visual representation of what I'm talking about here, we can see that since the beginning of the month, we saw this impulsive move to the downside, getting into the $81 level, and then we started seeing multiple rejection of that area as price broke out of that trend line to start finding higher highs and higher lows, giving us a clue of a bullish trend continuation pattern. So we can see multiple rejection, and then we saw this engulfing candle taking us right above the $88 level we were able to identify yesterday. So now that we had the breakout of structure, remember we had this breakout of structure yesterday, and I told you that a retest of structure should give us a confirmation to join the rally, and if a rally happens, we want to be moving our stop loss to break even to protect against any sudden pullback that is likely to happen here. And then we moved our stop loss, and price actually came back into our entry zone, taking us out at break even. So now, going into the New York session today, how do we intend to take advantage of any possibility that is likely to come up on the US oil? Well, we have two scenarios as usual that we want to be looking at. Hold on a second. I want to bring this one out here. So we have two scenarios we want to be looking at. And this key level at the $88 is going to be our guide for today. So now what do we want to be seeing here? Right now, with the present structure we have here, and as we have seen that price has consistently respected this bullish trend line since the beginning of the week, we want to be buying the US oil right above the $88 level. So we want to see a scenario where price continue to the upside. We already have a breakout of the $88 level. We saw price come back to do a retest of structure here. In fact, we had multiple rejection of this $88 level. We had one here, 2, 3, 4, 5, and then we had the 6th candle running on the 4 hours time frame right now. So we want to be buying the US oil right above the $88 level, as we want to see a scenario where a trend continuation to the upside is going to be happening. So that's how we intend to trade the US oil. That's how we intend to buy the US oil this morning. However, if at any point in time we see or we sight or witness a significant breakdown of this bullish trend line, I want us to see that as a bearish signal. But remember, we don't want to get too excited at this point, as there is a possibility that it could be a false one. But what we want to be doing is to wait for further confirmations to happen. And if that confirmation is going to happen, we want to be looking at a retest of the structure. You can look out for a retest of that bullish trend line, that is the purple line on your screen, or the key level at the $88 level, where we want to be citing reversal patterns on lower time frame or multiple rejection of this level or patterns that supports a trend continuation to the downside to join the decline here. Now, if we are going to be buying or selling the US oil, where will our take profit target be? Well, if we look at the current structure we had on the daily time frame, hold on a second, let me share with you what our expectations are. If we look at what is happening on the daily time frame, remember we had this bullish trend line, the black one here, which was broken during the later part of the month of August stroke the first few days of the month of September. We saw the breakdown of that bullish trend line, and we saw price coming back into this area. So, and we can see our price has been rejecting the $85 level, giving us a clue that we might be having a bullish momentum going forward, but we are not sure yet, as we still have a very strong consolidation phase since the beginning of this month. So the only thing that will give us further confirmation that a bullish trend continuation is going to be happening here on a long term is a break back above that bullish trend line, where a retest of either the structure or this bullish trend line will give us further confirmation to be joining a long-term bullish perspective here. However, like I said, if a breakdown of this trend line happens, then we might be looking forward to price coming back into the descending channel we identified on the 4 hours time frame here. So now, like I said earlier, where will our take profit target be at this point? Well, our take profit target will be somewhere around the $90.50 area. Let me delete this so that we can have a clean chart. So if we are buying the US oil here, we want our take profit target to be somewhere around the $90.50 area and the $92 area. So somewhere around here looks most appropriate, and the reason why that is simply because we want to see how price action is going to relate to that bullish trend line we identified on the daily time frame. So are we going to be having a rejection of that level to send price crashing to the downside, or are we going to be having a breakout of that level to give us an inclination of a trend continuation to the upside? So that is why we want to have our take profit target around that area. Let's see how price is going to relate with that level. Then we will be making a decision if price is going to be going to the downside or not. Now, that is the first scenario. Then the second scenario we're looking at is that if price breaks down this $88 level, which also shares a confluence with the bullish trend line we were able to identify here, a retest of structure will give us a confirmation to be joining the decline to the downside. And if a decline happens, where will our take profit target be? Well, if we look at the structure we have here, we can see that we have a descending channel running, and if we have a breakdown of that structure, we might be having a situation where price breaks down the $85 level, retest the structure to send price back into the support level of the descending channel. Now, where will our take profit target be? Well, we will be looking at somewhere around this between the 78 and the $80 area as a take profit target on a long-term perspective. But there is a caveat to this. Remember what I told you yesterday? I told you that if we are selling this and price comes right into the $85 level, remember this is a very strong and significant level we identified on the daily time frame. We want to be locking our profit, that is, move your stop loss to break even or lock in some profits, because we never can tell how price is going to relate with this level. We might be having another rejection that will be sending price going up, or we have a breakdown, retest of structure. Then if that happens, then we could be adding more position to our selling position. So this is how we intend to trade it. As soon as price comes into this area, if the selling momentum happens, we want to be locking our profit or moving stop loss to break even to protect our position. So that's how we want to be selling if a selling signal happens. So if you have any question regarding what I've just discussed so far, feel free to drop a word or two in the comment section, and let's see how I can be of help in that regard. So in the next 10 to 15 seconds, I'll be reading through the chat to see if there are any inquiries regarding what I've discussed before we move to the next pair. So let's see what's happening here.